Good morning, it's Jonathan Barratt with this week's Market Buzz. And, well, what can you say? Donald Trump, third time, an attempted assassination. Interesting to see, he's the only president that had this happen to him. Obviously, there's a lot of disconcern over in the US at the moment, which is causing crazy people to do things. Anyway, let's see how it portrays. I don't think it's going to be the last. Because certainly a lot of feathers are being ruffled over there, and certainly the economy is sort of taking a bit of a change. But anyway, on to the main things. Iran's Prime Minister leaves Pakistan, no deal. Trump extends the deadline again, but for how long can he hold on? I think that's a real key thing. How long actually can both parties hold on without Iran getting income and the US sort of having to struggle with higher prices for oil? Both leaders are reluctant to move on that, and let's hope Pakistan can come up with something that makes sense for both of them. So we'll dive a little bit more deeper into that one. We've got a big week for US earnings, and we've got UPS, GM, Coca-Cola and Visa all reporting. Once again, let's check the guidances. Remember the last time we reported on this, the numbers were okay, but the guidances didn't do much to the market. So that was also during that euphoric time when we actually felt that the deal could be done in Iran, and the US equity markets went to record highs. And mind you, equity markets are close to those record highs. Still sort of feels a bit funny at these levels, but I do get a sense that both parties are going to hold off, and whilst they hold off, that's going to cause issues for the equity markets down the track. And I think when you're lingering at these levels for such a long time, people will start to make some decisions to whether or not it's time to take some profit. Would you be buying at these levels is a question I often ask clients, and the answer is probably no. Okay. When we look at oil prices continue to gravitate higher, and that caused more inflationary effects and more harm in a lot of the economies. So that's going to sort of mean the recovery process will be a lot harder. So we'll get more inflated numbers, less sentiment growth. Remember, we've had some sentiment numbers out of the US, and they're the lowest on record. Now I'll repeat that, the lowest on record. So that is a major concern for me. And I get a sense that because of this, because of where we're at, the equity markets cannot remain at these levels. Okay, across to China, China's industrial profit surge, which is a bit of a rare thing, but we also on the back of that saw industrial profits up around about 15%. So that to me was a bit left of right, but China is also extending more fiscal discipline to the market, so we can expect more expansionary policies there. And I think China can actually do this and will do this due to the effect that we can see that they have the reserves to do it, and also the issues that, and I think most economies are trying to be managed with the prospect that they'll have inflationary issues down the track due to the oil shock. So I think China is doing the right thing in this respect. Okay, now we're also got a bit of a focus on wheat too towards the end. That's a trade recommendation for the week. Lots of really weird things happening there, mainly drought in the Great Plains in the US, potential drought here in Australia, which represents 20 to 25% of the global supply. The last time we saw this occur was with the Russian invasion of the Ukraine, where their combined total was about 20-25% as well. So at that stage, we saw wheat prices double. It's up near $1,100 a bushel. They're around about $600 a bushel now. So we can expect some volatile times there if the drought continues. Okay, and also within this report, we're going to have a bit of a deep dive into the budget. The budget is due on the 12th of May, and we've spent a lot more time on that budget, something local. So to see whether or not we think equity prices are at record levels in Australia, where they are, and are they sustainable? Also the Aussie dollar, is that sustainable, that rally that we've had? So we have a bit of a deeper dive onto that. Okay, I guess let's have a quick chat about what's happening in the Middle East. And I think that to me is, whilst we're seeing oil gravitate back up to 110, and we're seeing both sides. Tehran has come back and said this is what they proposed. The US has said this is what they proposed. The Malaysians is continuing, of course, no one's budging. Whilst no one's budging, time goes by, and as time goes past and those ships pass the Straits of Hormuz laden with oil, you have more issues, and that's what we're finding. So at some stage, it's I think a game of cat and mouse, and someone's got to budge. And if no one budges here, this stalemate will continue for some time, and as a result of that, oil prices will continue to gravitate to the top side. And I think if anything there, so far that's the status quo. Trump's a hardliner on one side and Tehran's hardline on the other side. So, and remember also, the US can't, I feel, go in there with troops on the ground. They certainly can't go on there and bomb, because Tehran or Iran basically said, okay, all our citizens get around all the infrastructure and hold hands, and the US can't bomb that. So can they go with the ground troops? Some people recommend that's the only way they will go. Okay, time will tell on that one. Righty-ho, okay, so what else have we got? We've got the Middle East. Earnings week, a big week for earnings. As I said, UPS, General Motors and Coca-Cola, they'll be coming out and issuing their reports. Once again, look at the guidance areas, and also look at guidance, and I think that's the most important thing as to where they see their income coming for the next 6 to 12 months. And I think if anything there, you just got a key. I mean, I was a bit surprised by what happened with the banking sector, but that volatility goes straight back to the banking sector, and that's what we're seeing, a lot of volatility. So they've made that income, and I think that is interesting, because the market's quite confident about that, regardless of where we're seeing inflation. And I think that's also another good important point. The year ahead inflation in America accelerated to a 7-month high of 4.7%. Now that flows in contrary to what we're seeing with the Fed, where they want it to be. So that to me is a big issue. But I think generally what's happening is the market is pricing a best case geopolitical outcome, and they're ignoring the mounting downside risks. And that to me is a big problem, because that'll create, it's like an elastic band. It'll go to an area and all of a sudden, bang, straight back in, and markets will adjust quite quickly. Okay, so this week we're talking a little bit about the budget. There's more obviously in the buzz in Australia, and as I said, that gets handed down pretty soon. And the reason we're going to focus on that, because we've been short equity markets for such a long time, and we've also been long the Aussie dollar for such a long time. So I thought it would be a good idea to regroup on the next up and coming pressure point for the market. And of course, that's the budget. And I think this year's budget is going to be very poignant, because it'll have to balance the pressures, across the economy, where we've got cost of living crisis, we've got energy crisis, we've got housing crisis. All these crises are there, and it'll be interesting to see how the Treasury actually reacts to that. Now, I think it's also important to see whether it's an inflationary feel or non-inflationary. And I get a sense that the Australian federal budget will be mildly inflationary, with what they're looking to do. So far, we can see the areas which they're structuring, and I think if anything there, that sort of still remains pretty inflationary from my side. So I think if anything there, anything when you start to issue things about productivity, when you look at that sort of stuff, in my mind requires more of a spend. Also remember that the federal government at the moment is spending more and more money outside the budget. So when you add those together, it's quite a lot of money they're actually spending of our taxpayers' money, and that I think we'll see that inflationary feel. Now, when you look at that inflationary feel, those influences will be filtered down through to interest rates, and if they filter down through to interest rates, that'll be yield. If they filter down to there, then the RBA will not be able to lower rates. We'll have to keep rates going higher, which has been the trend, and I think that will be the trend going forward. If it keeps putting the Aussie interest rates higher, then we've got a natural offset for international investors, of course, the yield on the currency, and if that's the case, people will fly to the Aussie dollar. So if anything there, yield will be affected. So if yields rise, Aussie dollar goes higher, and equity markets should go lower, because that higher interest rate and cost of money will filter through the economy. And if it filters through the economy, then more profits will be reduced. Now, lots of industries are having issues at the moment, and I think this will just add to it. So there's no reason why equity markets should be at these levels. And I think the interesting chart we've got in the bars suggests that the difference between the ASX and the Aussie, and they're getting a nexus point where the Aussie will overtake where the equity markets are. And I think that budget will sort of cement that. So we're going to stay where we are with our positions and quietly just sit there and see how they go. Okay, so that's a bit of a summary there. Let's have a look at some of the trades we're on, and we'll just run through that and go through that. Let me just share my screen. Okay, here we go. What do we got first out of the lot? The Aussie dollar. Okay, there it is there. Aussie dollar trading at 71.70 at the moment, right on those highs, as you can see on the daily chart. And I think that sets continue as long as it holds at this level, and it has. Then in my mind that trend continues, looking for 72.50, looking for a lot higher in fact, and not much will see that change. Obviously a little bit of correction on the hourly chart, but I think the daily holds true, so quite happy to be long the Aussie there. Okay, let's have a look at the local equity markets, and there's ASX 200. As you can see here, although momentum indicators are on the lower end, we have come off those record highs, and I think if we're in a range, and if this is a top of any major importance, then it should oscillate between the highs. Now we've got a small head and shoulders starting to develop, and I think with that small head and shoulders starting to develop, there we go, let's just try it. Okay, that's a high there, 9,230, and I actually think that we can come back down to 8,300, see what happens from there. But at the moment, in that range, coming back to that range makes sense. So we're quite happy to remain short with our positions, and we'll adjust it on the downside. Okay, let's have a look at the US markets. S&P 500, it's on record highs. What do we make of that? Look, once again, I find it very disconcerting that we're at these levels, given what we've got so many problems and where consumer sentiment is. And it sort of reeks of some form of intervention, and I do think that it'll slow down and come down over time. It can't be held. There's too many issues which aren't aired. You know, federal budgets. You know, we can't fund them in the US, so it's still a problem. So when I look at this, and then no one's really focused on the fact that the tariffs in the US were not legal, and all that has to be paid back. So I think there's a lot of fluff happening at the moment, which causes a bit of a concern for me. So we're happy to remain short there. Okay, let's have a look at the oil price. Just have a look at Brent there, and there it is. It's getting back to those highs. We have already in the WTI, in the Brent contract. Sorry, we're about to hit through that 110 level. The futures are already through that level. And I think we get a sense that they'll take it higher until they can see something more concrete coming out of the Middle East. Whilst we don't see anything more concrete coming out of the Middle East, then suggest prices will continue to gravitate higher. On the gold market, under a little bit of pressure today. Nothing too major there, but I do think we're building up for a move to the top side. Let's just see. There it is, right on those lows. Still going sideways. Nothing definite either way. We did have a little bit of a sell-off here in Asia today, so I'm not too worried about that at the moment. Okay, so that's gold. Let's have a quick look at silver. Silver gives us the same story, but I love this formation, and this breach, pullback, consolidation, then ultimately higher, and I think that will eventually be the case for silver. So happy to remain long there. Well, I think that's just about a wrap for this week. Hope everyone has a good week. It's going to be quite volatile, but happy trading. Stay safe. We'll talk to you next week. Bye for now.